Hello, good evening. Welcome to Business Live. Coming up in this edition, Bank of Ghana to continue with dollar support program for fuel imports until a new deal is finalized for implementation. We will hear from the National Petroleum Authority.
The BOG has made it very clear that they are in tune with bringing the BDCs under the gold purchase program. And the BDCs are happy about that.
The gold G4O
So I think we keep saying G4O program, but it's not. The whole idea is to be able to buy gold to finance our oil imports. That's the objective.
Visiting World Bank president pledges to help Ghana develop more ICT initiatives to create jobs for the youth
and skills for the future that the job market needs and will need. So the World Bank is very committed to the jobs agenda, which is creating good and interesting jobs for all the people in the country.
Plus, Stand Chart to sell 5 subsidiaries in Africa to Access Bank. We will find out why these global banking giants are leaving the continent. We have details of these and many others lined up for you. Please stay. Always a pleasure to have you on. I am Pius Kojobaka. A look now at our stories. The Bank of Ghana is set to continue with its dollar support program for fuel imports until the new deal is finalized for implementation. Well, this is one of the agreements that the central bank has reached with the bulk distributors of petroleum products on the future of the program. Now, it follows concerns that the central bank will soon halt support for imports as part of the IMF program conditionalities. Abbas Tasunti is the head of economic regulation at the National Petroleum Authority.
And the central bank has made it very clear that the IMF conditionalities does not really say that stop the auction for the BDCs. Yeah. Now, the reason why the BDC
auction, has agreed that they are still going to roll ahead.
The BDC auction that started last year, April till date, has not been able to meet 100% of the BDC's demand. I think they met 37% of their demand since they started. The last auction they met 25% of their demand. So we are looking at how can we look the other forex demand they have, how can we cover that? So the gold purchase program, which has shown that it has advantages, is what's going to happen now. The BDCs have been asked to come back with a proposal on how they are going to finance this gold purchase, because you need to buy the gold before you can liquidate it and give them their dollars. So now there's an agreement and there's a clarity that this is the way to go. And that's how come the BOG has given the calendar for the next auction. They are not going to stop the auction now, because if we allow the CD, the auctions have helped to a large extent to stabilize the CD. Because the uncertainty
and when they just announced even the calendar, it brought some
certainty. Exactly. So the BOG is aware of this and therefore will not just rush to take actions that will cause our CD to start depreciating again and lead our prices to start rising again. So the BOG has made it very clear that they are in tune with bringing the BDCs under the gold purchase program. And the BDCs are happy about that.
The gold G4O
So I think
program.
we keep saying G4O program, but it's not. The whole idea is to be able to buy gold to finance our oil imports. That's the objective. Not that boss may buy it and give it to the BDCs, but even if we can get the BDCs, like I said, to also bring their CDs, it's used to purchase gold, and then it can finance their imports. The boss currently has been importing products and supplying the market, so it's doing part of the market. We still have the part that the BDCs are doing. I think it's also very important to clarify that even before G4O, Boss was bringing in products and selling to some BDCs. Not all BDCs import products on their own. So the Gold for Oil program only gave them that advantage of they getting their forex funding through the gold purchase program which the BOG has. So I think with time you would see that the BDCs may confirm to you themselves that the discussion that we've had with Bank of Ghana were very positive and they're happy about it, that they are going to go.
So the assurance from BOG is that they're not going to take any abrupt decisions that will disrupt the market.
Not at all.
Still would intervene to meet their FX need, at least for a while, before we look at alternatives that can stabilize the price.
The idea is that once the gold for oil, all the BDCs are brought under the gold purchase program, then the auctions can stop. I think the concern is having different auctions, like multiple auctions by the central bank. That's what IMF is against. But it's not against the central bank taking measures to ensure that the inflation is addressed. And like I said, petroleum products is one of the key factors that leads to inflation in this country. And the BOG has made that clear. So as long as fuel price contribute to that, they are willing to support the import of petroleum products so that there is some certainty to the price of petroleum products.
Let's continue with some other stories. And Standard Chartered Bank says it has reached an agreement to sell its subsidiaries in Sub-Saharan Africa regions to Nigeria's Access Bank. Well, this of course will affect its business in Angola, Cameroon, Gambia, and Sierra Leone. According to Standard Chartered Bank, it will also sell its consumer private business banking services in Tanzania to Access Bank. But what could Ghana be next, and why are these multinational banks basically leaving Africa in these times? Let's get on to Zoom and speak to banking and finance lecturer at the University of Ghana Business School, Dr. Benjamin Amwa, for some analysis on this. Mr. Amwa, good to know you are on, and thanks so much for joining us on Business Live. First off, what do you make of this exit by Standard Chartered Bank in these countries?
Thank you. It is more of the case of the parents of Standard Chartered using the profit motive to make a case for their exit in this market. Why am I saying so? You see, these countries that Standard Chartered has decided to exit, countries that the fortunes of Standard Chartered have been dwindling for some time. And so in the overall strategy of the Standard Chartered Group, it would be good to exit this market and then reposition the same Standard Chartered brand in other economies in Africa and the Middle East region to still continue with their Standard Chartered business. So it's not as if they are moving out entirely and moving out of the region.
Okay.
But it's just an issue of repositioning themselves in areas or economics that are more profitable.
But could Ghana be next, looking at the fact that Standard Chartered Bank over the years has carried out some restructuring of its business in Ghana, do you think?
Information coming out does not point to the fact that Ghana will be next. In fact, it is 7 markets that Standard Chartered is exiting, of which we have seen 5 from Africa. In the same release, Middle East was also mentioned. We have not yet heard of the exit from Middle East. So for now, until we hear any other information from Standard Chartered London, one will say that Ghana is a safe place to do business as far as Standard Chartered is concerned. Again, on the issue of the business restructuring, the model that Standard Chartered is using, if you have observed Standard Chartered over time, realize that Standard Chartered has pursued more of the differentiated banking strategy, where they do much of their business in the area of wealth management and asset management, and a little bit of their business also in the area of intermediation, in other words, loan or lending. So clearly, if you look at this particular model, and you look at the results that Standard Chartered has been posting over the period, clearly, Standard Chartered has not been the typical commercial bank that has branches all over the place. Standard Chartered has assumed a more of a conservative approach, and they do their business by focusing on a particular segment of the market, and they differentiate their products in that particular market. And so far, that business model has been really, really successful as far as Standard Chartered is concerned. So I would say that Ghana is profitable for Standard Chartered, looking at the business model that they have adopted. And until we have any information coming from the parent UK Standard Chartered, one cannot say that Standard Chartered will be leaving Ghana anytime soon.
Dr. Amwa, do you think we should be worried some of these global giants are getting out of Africa? The first was Barclays, which sold to its business to Absa. Should we be worried?
It's a yes and no question. Yes, in the sense that, when these banks come out with the information that they are leaving or they are relocating, it paints a certain picture of the local economy that they are exiting, because capital will go to places that the returns are quite good. And so if these global giants are relocated, it means that the host countries that they are in currently is not posting or promising them enough returns. Hence, the need for their capital to relocate to other regions where the potential to rake in more by way of profit is higher than where they are currently located. So in the interim, that is how it will look like. Again, we talk about the issue of job losses, etc. But you have to think about it from the owner of the capital's perspective. If the owner of the business decide that this particular location is not good for my brand and for my bottom line, what can you do? There's very little that you can do. What you should rather be thinking about in terms of the yes, it is good for us, the no, it is good for us, that when they are exiting, have we built enough indigenous and domestic firms or institutions that can assume or acquire the ownership stake in these businesses so that when they are exiting, they don't sell off to other foreign multinationals, but rather we have local or indigenous firms that can acquire their interest. That is what we should be looking at. We should be looking at, so that in the end, we succeed in buying their brands and using their brands to complement what we have in our economy. So we should be looking at it as an opportunity, and the managers of the economy should build the domestic firms so we can acquire the stakes. If not, when they are exiting, they will exit by selling to other foreign multinationals, and we end up not benefiting from the assets that these institutions should have acquired when they are leaving.
I know you mentioned that Ghana, for instance, is profitable, for which reason we need not to worry about. But do you think Africa is no longer profitable following this development? Do you think so?
No, you cannot say that Africa is no longer profitable, because data shows that Africa is young. Data shows that usage of technology in Africa is very high. So Africa is really, really promising. You see, it depends on the interests of the parent of the multinational. And you see, it's not only Africa that is the destination for foreign direct investment. In fact, data suggests that Africa received the least in terms of percentage of foreign direct investment. It is about Southeast Asia, it's about South America, and it's about Europe. So when it comes to Africa's share of foreign direct investment, Africa is even not as an attractive destination as one would like to make it look like. But then going forward, in the same region of Africa, there are some economies that are really, really doing well. And so if you look at the strategies of these multinationals, they don't exit the continent entirely. What they do is that they fold up in some regions or some economies, then they relocate in other economies that are promising higher returns for their capital. So that is how we need to look at it. In terms of Africa as a whole, not attractive. No, Africa is really, really attractive. But just about repositioning themselves into areas that will give them more than what they are getting in terms of their current locations.
Great, thank you very much. But before you go, I would want you to hold on as we engage my colleague George Yafi on this development story. I'll come to you pretty soon to pick your thoughts on that. But we do know that government has finally reached a deal with the commercial banks on restructuring the local dollar bonds as well as cocoa bills. And my colleague George Yafi has joined me in studio for more. George, what more are we learning?
So what we are picking up, that this is more of an interim agreement that they've reached with these commercial banks on these papers. And now before government decided to launch these invitation, they had to go back and engage these commercial banks and other interest stakeholders in terms of those who have critical holdings in the cocoa bills and these local bonds that were issued in dollar papers. So government has reached these deals with these interested parties, therefore giving it the way to officially go out and launch these more of another form of domestic debt exchange program. So not trying to confuse anyone, just like what happened with the bonds.
Okay.
This is another form of domestic debt exchange program being launched today. Now it asking every individual and commercial bank out that is holding these dollar bonds that was launched some time ago to exchange it for a new bond that government is going to issue to them with respect to restructuring the papers. Also, if you hold a cocoa bill as well, it means that from today, government has launched this offer for you to bring that old papers that you're holding in exchange for new papers in terms of trying to restructure these two separate bonds that was launched some time ago.
All right, so George, let's focus on the specific bonds.
Yeah.
First off, the cocoa bills.
Yeah, the cocoa bills, you're looking at some significant amount of money here. So just like what I tried to explain earlier on, that if you hold a cocoa bill right now, you may have a period that thing has been launched now. In around August 4, that was when the offer would end. So again, just trying to break the issues down, just like what happened to the first round of the domestic debt exchange program. This is a similar thing. It means that it's a voluntary program. If you hold these papers and you want to exchange for these new bills that government is trying to introduce. You have that offer or you have that opportunity to do that. If you don't want to and you still want to stick with the old terms, you can hold on to that cocoa bill that you're holding.
Dr. Amwa, your thoughts quickly.
Yeah, these are interesting developments on the financial market. Again, it goes to make the case that the country still needs a lot more fiscal space. So a lot more of the indebtedness of government must be restructured. For the cocoa bond, we had information that they were not meant for individuals. They were meant for institutions. Some way, somehow, the bank sold it to individuals. So it is up to the individuals to take a decision as to whether they may want to exchange them for the new ones or hold on to get what they were promised. The same applies to the dollar-denominated bonds. Again, it's up to the holders to decide to exchange it for the new ones or to hold on. But then the whole thing is this. You need to look at what has happened to the holders of this same instrument when we went through the domestic debt exchange program. And then use that as a lesson to advise yourself as to whether you want to hold on or you want to take advantage of the offer that the government is bringing. But for now, it is too early. Let's get the details of the offer, and then we can have a more informed discussion on what government is promising this time around.
George, let me come back to you. So what impact do you think this would have on the commercial banks?
Well, let's still stick to what government has proposed in the offer. Now, government says that it believes that this will help them to close the page when it comes to restructuring of all the domestic bonds or domestic debts that they are holding. Now, for the banks reaching or agreeing to participate in this offer, it means that there's still some surety going forward in terms of some comfort with respect to these papers. Because with respect to the old ones that they were holding, there was still some uncertainty going forward whether government might be able to meet its obligation to them in terms of settling these papers. Now, with this new deal, it means that they have some surety that based on this whole restructuring program, government can meet its commitment to them with respect to the dollar papers and also the cocoa bills as well. On the part of government, it argues that it would now go a long way to more of close the paper or close the chapter, on this domestic debt exchange program. And that will go a long way also to help us, the IMF program, and actually try to reinforce more of the investor confidence in the economy as well. So if you engage the banks, it appears that they are fully committed to this thing, some surety going forward. On the part of government, they feel that now they have some surety going forward with respect to this whole domestic debt exchange program.
All right, thank you very much, George Yafe, for that clarification. It's my colleague here at Joy Business. And Dr. Benjamin, we are grateful for your time as well on Business Live. You're watching Business Live with me, Pius Kojo-Baka. We've got more for you after this break. Hello, welcome back. The World Bank is impressed with the digital innovations ongoing at the Accra Digital Center and has indicated its readiness to support such employment creation ventures. This is an assurance coming from the World Bank President, Anna Bejadi, who is in Ghana. According to her, the Bretton Woods institution is making efforts to skill up entrepreneurs through technology. She was speaking to journalists after inspecting some initiatives at the Accra Digital Center as part of her working visit to Ghana.
And a couple of important words there is really scale up. And what I like about projects like this is that they test out new things. So what we've seen today visiting here is that we've seen people being trained. We've seen people being in the process of producing new products that maybe we don't even know about yet. And we've seen people network. And what I like about this is that it brings a lot of new ideas, which is exactly what Ghana needs at this point in time, because there's a young dynamic population that is increasingly reaching higher education attainments. And what we now need to pivot from is, in addition to great education, is skills, and skills for the future that the job market needs and will need. So the World Bank is very committed to the jobs agenda, which is creating good and interesting jobs for all the people in the country, and particularly the youth. So this is great, and this is very, very interesting. So we're here to stay, to continue to invest in these types of interventions. Getting started, but we had a very, very good morning visit and discussion with the authorities broadly on the economic outlook of the country. Like many countries around the world, Ghana also is having difficult times economically, but we are working closely to really help move on many important areas to be able to improve the economy, particularly bring down the cost of living, inflation, which is hurting many people around the world, but also continuously improve the business environment, more private sector, more jobs.
In a bid to promote financial literacy among the youth in the country, the Ghana Stock Exchange, together with the Central Securities Depositories, has partnered the Young Entrepreneurs Network to launch the Youth Investment Education Programs to deepen the financial knowledge of young people while investing in the financial markets. Speaking at the launch of the program, Head of Marketing at the Ghana Stock Exchange, Jerry Boachi-Dankwa, said the program aims at creating awareness about the capital market and also giving career guidance to students. Here's more from the launch.
The Youth Investment Education Program aims to promote interest in savings and investment amongst the youth, thus boosting financial literacy. Speaking at the launch of the Youth Investment Education Programs, Head of Marketing at the Ghana Stock Exchange, Jerry Boachi-Dankwa, said they are targeting about 10,000 students across the country to increase their knowledge of savings and investment as well as activities on the capital market.
This year we look forward to a very exciting program, and the whole idea and the ultimate aim of this financial literacy program, being organized by the Ghana Stock Exchange, CSD and Young Investor Network, is to ensure that every Ghanaian becomes financially literate. Until every Ghanaian becomes financially literate, we will not stop this program, because we believe that when people become financially literate, they will make informed decisions and they will make sure they make the right decisions with regards to their money.
CEO of Central Securities Depository, Michael Mensah, says the investment education program will afford students the opportunity to deepen their skills in financial markets.
Collaborating with the Young Investors Network is one of the ways that the CSE can drive its objective of deepening knowledge of the financial markets of Ghana and the investments opportunities available. Then thirdly, programs focused on the deepening knowledge of young people in the financial markets, and for that matter, encouraging them to invest in financial assets constitutes an important element in achieving economic growth and development.
On his part, Executive Director of Young Investor Network, Fibuzi Ache, expressed his outfit's commitment to educate the youth on financial literacy and business skills with investment programs designed to support a favorable business climate.
Young Investors Network is there to bridge that gap. We give, through our workshops, through our training sessions, we give the students the opportunity, we give them the necessary training to relate. So basically, we want to impact knowledge on students. We want to give them that experience so that they can also make some decisions, financial decisions in their daily lives.
The Youth Investment Education Program is expected to prepare the youth to become socially and financially competent adults to contribute to the socio-economic development of the country.
Thanks so much for watching Business Live. Here with me, Pius Kojo-Baka. And just so you know, come Tuesday, we will bring you our pre-budget, media budget presentation, where we have great panelists lined up. Economic transformation, what should the policy direction be in the 2023 media budget? We've got Professor Godfrey Bofkin, we've got Dr. Humphrey Enyim Dake, we've got Joseph Oben, we've got Mark Bedu Abuaje, we've got Yao Lati and Edward Carriwell, as well as Falong also coming on board. You just don't want to miss out. It's Tuesday, 18th July 2023, 1 p.m. to 3 p.m. on all our social media platforms, including Joy News and live on radio on Joy 99.7 FM. Do make a date. Thanks so much for watching. See you next week. Bye.